The Hut Group is essentially an e-commerce platform with THG Ingenuity as its fundamental platform product, which works for its own brands, which include MyProtein and some beauty products, as we can see here. And one of the best things I like about this website and the things is the imagery on it, and the congratulations to the photography, or whoever the guy's doing the work on there is doing a really, really good job. So there's some really nice things. However, for the rest of it, it seems to go a little bit downhill. So let's have a look through the company to give you a bit of an insight here. So I'll scroll down from the website. So we're seeing beauty brands as their own brand names. And go into investors and MyProtein, and there's a MyVitamins as well. So they're a little bit diverse in their own products, but they're also doing some work on behalf of other major players as well. So let's have a look. They're really just tapping into their nice, pretty platform, which includes companies we'll go through here in a moment. So pop into the investor relations page and let that one load up. There we go. I think we'll do the at a glance page because that looks very reasonable. You see, the photography is really, really good. I do photography myself and really appreciate the work that's been going into this. That's some lovely work. Really, really nice. Okay, so beauty brands there, health and fitness brands with nutrition products, MyVegan, MyProtein, MP Clothing, MyProtein Pro, MyVitamins. Here we are. Okay, lovely picture, that one, beautiful. So really what happened with the Hut Group is that Matthew Moulding, the CEO, stood up at an investors presentation last December and announced that he'd really like to IPO off a lot of the individual companies within the group to split the whole thing up. And the analysts took a sharp, deep intake of breath, and the share price subsequently absolutely tanked. Let's go across to SharePad and have a look. So THG Group had really hit a nice high, just over the 800 pence per share mark. And since then, it's been a downward journey. And here we can see late last year, once those announcements were, although I thought it was December, I think it's about there. Look at that. That absolutely tanked. We had a small dead cat bounce here. And then it's just continued to fall and fall and fall. And we're on today's low, sitting at 114 pence. Yeah, it's not great. Let's have a look at the financials. So turnover versus profit as a first graph. The turnover has been actually growing quite steadily. We're yet to see the final figures for 2021, but we've got some interim figures to have a look at. But the profitability is just absolutely collapsing. Free cash flow has never been particularly good. And that's getting worse and worse and worse as a situation. And Simply Wall Street was reporting, as we'll look at in a moment. There has been some devaluing of the shareholders' positions, watering everything down. Assets versus liabilities haven't got the 2021 figures, but on the 2020 figures, assets and liabilities are reasonably helpful. So the debt looks reasonably under control, but it probably is only because they're affecting the actual investors underneath. Capital expenditure has been increasing steadily year on year. We're projecting even more capital expenditure for the 2021 year when the figures come out in June. So yeah, overall it's not great. So let's go across and have a look at Simply Wall Street. I can't do a DCF myself on those figures because it's just not going to work out as an accurate figure. So Simply Wall Street's coming up with a fair value on their take with a pinch of salt DCF calculator at 86 pence a share, which is even lower than the current share price, just plummeted so far. Is it a buy? Well, it's certainly on sale at the moment. There's no doubt about that. Is there more room falling further? Yes, I think we're really going to sit on the fence on this one and wait and see the results in June and see how the 2021 figures finally came out and what Mr. Moulding has in plans for the coming year ahead. So that's it for THG, and we'll come back and give a further update at the appropriate time.